All right, guys. So, welcome to Fast Finance. I went ahead and created this show because I felt that there was nothing that covers everything quickly, and there's a whole lot of stuff that covers nothing all day. So, basically, this show is just intended to bring you the biggest news of the day in the stock market so that you can be properly informed without putting too much of a dent in your free time. I won't focus too much on individual stocks or mergers unless they're relevant to current news. If they are relevant to current news, I definitely will talk about it. And that's just in order to keep the news as relevant and as concise as possible. But to go ahead and start off here, we do have some information, negative information about the stock market dropping quite a bit. This is going to be the result of a rapid rise, as you can see, in treasury yields. It kind of scared equity investors. This did have a negative effect on all three major indexes. And as a result, the NASDAQ, as you can see, underperformed with a drop of 3.5%. Most importantly, that is its worst session since October, and it was led by tech stocks. So again, circling back to the reason for this is the U.S. Treasury rose yields to new highs, at least intra-year highs, and actually that's going to stand at about 1.45% now. So that is something to keep an eye on for sure. Next up, we have pending home sales. So, pending home sales have long been a leading indicator of the health of the housing market, as you can see here, and they plummeted in the first month of 2021. The NAR, the National Association of Realtors, tracks a number of homes, as you can see, that are under contract to be sold. They fell 2.8% in January from the previous month. Most importantly, missing analysts' expectation of no change whatsoever. So, a fall in real estate, which is more easy to predict than, say, just some penny stock or OTC stock, something like that, of 2.8% opposed to no change whatsoever, is pretty significant. So that's, again, something to keep an eye on. Down here, I've highlighted home price growth rose at the fastest pace since 2013 in December, so that's quite a while now. 2013, that's going to be 9 years later, so or almost, anyways. So according to new data from the S&P CoreLogic Case-Shiller National Home Price Index released earlier this week, we have that information. Next, let's go on to something that I think is a little bit interesting, and that's going to be the crypto boom and specifically how Coinbase relates to that. So, Coinbase, I first would like to point out, is different than many of the companies that went public last year in the US, and that 85% of the companies that went public in the US last year were actually unprofitable, and 15% were profitable. Coinbase is actually amongst that 15%. It's already a profitable business, and they're going public. Another interesting thing that it doesn't really necessarily directly say, but is that the less the crypto traders hold, the better Coinbase does. And why is that, you might think? Well, Coinbase makes their money off transaction fees. So it's always been sort of a mantra amongst crypto traders to have long-term investments. There are certainly penny flippers out there, but generally you buy and you hold until your investment has, skyrocketed to the moon, so to speak. And the more cryptocurrencies stabilize and the more they reach a price point that people can, start to agree upon and accept, the more these cryptocurrencies will start to be used as a medium of exchange. And the more that they're used as a medium of exchange, the more they're going to change hands. And the more they change hands, the more Coinbase actually will yield as a result of those transaction fees. So it really does stand a chance of becoming a PayPal of sorts just for cryptocurrencies. Other big news over here, President Joe Biden said that the federal government is going to distribute the J&J coronavirus vaccine just as fast as the company can produce it. And obviously that's so long as it's approved by the FDA. But the administration says it's going to allocate between 3 and 4 million doses of the J&J vaccine immediately upon its approval. That means that the stock is hinging upon that approval right now. If it gets the approval, obviously it'll shoot up. If it doesn't get the approval, it will go down. But as you can see, if the approval goes through, the company has said it can deliver up to 20 million doses by the end of March. And since Biden does have his goal of 100 million in 100 days, that's something that I could see happening. Next up, we have Nvidia. So Nvidia shares actually declined Thursday, even though the chip maker had some strong results and some outlook. The thing was, there were some expectations regarding demand from specifically cloud-based organizations that just wasn't there. That said, Nvidia's earnings were nearly stellar, and I think I put here, at least 17 analysts raised their price targets in response to the results. And there are things to quote-unquote nitpick if you'd like. But that said, I think that something like a 675 price target, 665, 680. So, through and through, analysts seem to like Nvidia after this result, and even though Nvidia fell. So this actually might be a very attractive time to buy the stock. It says of the 39 analysts who cover Nvidia, 30 have buy ratings on the stock, 7 have hold ratings, and 2 have sell ratings. The average price target on the stock rose to $628 from a previous $613 on Thursday. Again, not even implying, just directly telling you that the analysts like what they saw. So again, the stock is on a discount. Next up. So we have actually a global shortage of semiconductors. So obviously anybody that owns a semiconductor stock, at least certain semiconductor stocks, are going to be happy about this. And that's just because there's actually going to be continued short supply throughout the year as a result of COVID-19. And that's going to increase demand pretty dramatically. So obviously certain stocks are going to benefit, let's say like Lam Research or like Micron, places like that. But so it says down here, the full impact of the chip shortage did not actually come to bay until Ford Motors and General Motors, as well as other automakers, said that they actually had to shut down production of certain car models because of a lack of semiconductors. And that's just entirely. So they weren't able to rely upon a different company for semiconductors or something along those lines. They just didn't have enough. And to shut down production, to me, that implies something, pretty large. And then another thing I'd like to point out, it says, amid growing concerns from industry leaders, President Joe Biden is set to sign an executive order Wednesday, calling for the review of critical U.S. manufacturing supply chains that may rely too much on China, particularly those involving chips and high-capacity batteries. Now, I don't think that this is going to be a problem for semiconductor stocks, only because, as you can see here, General Motors and Ford Motor, who President Joe Biden obviously would like to protect, given that these are American companies, need semiconductors, and so it would be unwise of him to disrupt a supply chain involving semiconductors, but there is always that risk. Next up, we have Airbnb. So Airbnb reported some surprising results. They reported revenue in the fourth quarter that actually exceeded analyst estimates and opinions. Basically what it shows is that people are willing not only to travel now, but that their willingness to travel is rising and rising beyond expectations. So COVID-19 and the travel industry might have a relationship that you would not have expected. Airbnb showed sales of $859 million, a decline of only 22% from a year earlier. I know that sounds odd, but given COVID-19, a decline of only 22% is actually positive. And analysts were only projecting $739 million in sales, that is, and again, $859 million were procured. So that certainly is something that people can look at. It still might be an undervalued stock. Next up, we have AT&T. So AT&T is going to go ahead and offload its DirecTV operations. Essentially, it's just going to say, hey, look, we're kind of done dealing, at least in large part, with DirecTV. They're going to sell that to private equity firm TPG. TPG is valuing the business at about $16 billion, although they're doing some business games that kind of make that valuation a little bit unfair. But what this does is it gives cash to AT&T, such that AT&T is actually able to further invest in their 5G networks and wireless expansion. Since 5G has been dubbed by Zacks Investment, if that's somebody that you follow, as one of the greatest growth opportunities of the decade, this might be something to look at. And then down here, as you can see, AT&T still has a small take in DirecTV, but the biggest takeaway I actually took out of this highlight is that AT&T sees competition with Dish Network as inevitable. So that is something that I also think that people should pay attention to. If that competition is inevitable and not yet fully occurring or realized, then maybe stocks will take a hit as a result. And then let's talk about GameStop. So GameStop is obviously interesting. It's atypical, and it's something worth mentioning. So what happened here with GameStop is it had another surge. It went up more than 104%. There were 2 afternoon halts, so who knows how much it could have actually gone up. But essentially what happened is there was a catalyst, and that catalyst was GameStop said on Wednesday that its CFO, Jim Bell, was going to resign on March 26th. There were some sources indicating that perhaps he was compelled to resign so that they could hire somebody in his place and sort of redirect their efforts over at GameStop. If people take Ryan Cohen sort of at his word and at his name, and he is actually able to turn GameStop around, then this would be a very positive sign, and that's why the stock reacted as such. There is some other news down here. There's actually way too much news to go over in one simple video about GameStop, but Barstool Sports founder went ahead and faced off with with good old Vlad from Robinhood about the GameStop saga, if you will. And then Keith Gill, also known as Roaring Kitty, went ahead and doubled down. He didn't really double down, but he put a lot more money into GameStop actually right prior to this all happening. So good on him. Next up, we have Beyond Meat. Beyond Meat, it says, goes mainstream with big deals with McDonald's and Yum Brands. This is actually real big. So Beyond Meat rallied after announcing a 3-year global strategic agreement with McDonald's. Obviously, McDonald's is providing a lot of burgers, so for Beyond Meat to be associated with them in any way is huge. Basically, the terms of the deal, Beyond Meat is going to be McDonald's preferred supplier for the patty and the McPlant burger. I actually haven't heard of this, but I imagine it's going to be a bigger thing. And since I haven't heard of it, you can almost assure that it's going to increase in popularity, and as a result, Beyond Meat might benefit. But Beyond Meat also announced a partnership with Yum Brands, which is another huge company, to co-create what it calls, quote-unquote, craveable and innovative plant-based protein menu items. So you're going to be able to get that KFC, Pizza Hut, Taco Bell, all sorts of places, fast food and quote-unquote healthy foods. I'm sure people are going to love that mix. It's the same reason people drink Diet Coke with aspartame instead of regular Coke with sugar, right? It seems better and more palatable. So Beyond Meat, I wouldn't think that it's going to go down anytime soon. Here's another thing. So this is from Virgin Galactic. They actually pushed back their targeted spaceflight to May 21st. This is from their press release to May 21st. So that's later than was expected. And their stock actually dipped as a result of that. So if you're invested in this, go ahead and take a look. iHeartMedia beats on revenue. So revenue of $935 million was expected. Beat that by $37 million, about $38 million actually. So pretty impressive in that regard. If you own Spotify or iHeartMedia, obviously, then something to take a look at. So here's something that doesn't seem like it directly relates to stocks, but it obviously does very much so. And this is coronavirus. So COVID hospital admissions actually plummeted 72% within a month in the US as the virus, obviously ebbed as a result of vaccination. Particularly Americans 85 and older saw the largest drop, down 81% from January to February. Why is it important? Well, for almost any reason you can imagine, but essentially getting people back out there, working for one, engaged in consumption, and then probably doing things that they felt like they haven't been able to do for the last year. So that's going to result in a lot of consumer activity, I can only imagine. This one is a little bit more niche, but CD Projekt SA said on Wednesday that it would delay a promised update for Cyberpunk 2077. This game is already getting a lot of heat, so the fact that this is happening is not the best for the company. They're blaming this slowdown on a security breach and that they were hacked and they were demanded a ransom, that they refused to pay that ransom, and as a result, they cut off access to any internal network. That's fine and well, but they did promise an update, and since people are already as mad as they are about the game being released in the state that it was, I don't predict good things for that company in the short term. Down here, we have DoorDash actually beating on revenue estimates amidst the pandemic. So this is probably expected, but DoorDash reported fourth quarter results that beat analyst estimates. And of course, the analysts expected people to use DoorDash much more frequently during the pandemic. But that said, they did actually beat the analyst estimates, but their losses more than doubled from a year earlier. So there's both good and bad to look at whenever you're looking at DoorDash. It's not all positive news, and that's for sure. One thing I highlighted down here, so it says the big question for investors is whether desire for food delivery will continue in a post-pandemic world, said Ronald Josie, an analyst at JMP Securities. He anticipates a quote-unquote big slowdown in growth in 2021, but is optimistic about long-term prospects. So I'd agree. I don't think that you're going to see any insane growth in DoorDash in 2021 and in the years following. But I don't think it's going to die off or anything like that. I think that they've established a customer base. I think that customer base is going to be willing to go back to DoorDash whenever they're tired, lazy, unable to drive, whatever it might be. So they're still going to have those customers, but they're not going to have 50% increases in customer bases every year like they might have enjoyed last year. So I do think that DoorDash might be one that people will sleep on if it continues to go down, if it does go down over the next month or so. We'll see. And then finally, the world's first Bitcoin ETF soared past $500 million in assets. So that's pretty interesting. Basically, what this is, it's called Purpose Investment Bitcoin ETF. It's a more direct way, at least is how it's being advertised. It's a more direct way or a more familiar way to gain exposure to cryptocurrency. So this is just a way for people that are very used to investing in stocks to continue doing so, but have exposure to Bitcoin. Really, the only difference is you don't have to set up a Coinbase account or whatever your option of choice would be. One thing I'd like to point out would be that the Purpose Bitcoin ETF actually carries a management fee of 1%, while its competitor and the second ETF to gain approval, the Evolve Bitcoin ETF, cut its management fee to 0.75% on Wednesday. So that might prompt Purpose to do the same thing, but if not, and if they have similar holdings, and this is the way that you want to gain exposure to Bitcoin, then Evolve Bitcoin might actually be the one for you. But that said, that's been the news of the day. I'm sure that there's a lot more to cover, but this was the big stuff. And I'll continue to cover anything else that comes out tomorrow. But for now, thank you so much for listening, and certainly have a great rest of your day.